With global uncertainties, what to expect from the equity markets? To talk more on this, we are joined by Ashley Menezes, who's the chairperson of IVCA and the partner and CEO of ChrysCapital. Thank you for joining us, Ashley. Ashley, I'd start by asking you that how do you see the IPO market will pan out this year with such global uncertainties going on?
So I think the IPO markets have been, generally very buoyant. Last year we had a very, very good year. With number of companies sort of filing. I know our friends and the bankers and the lawyers have been extremely busy, hard to get meetings with them as well. And that's definitely a good sign. I think the good thing as of now that we're seeing is companies are still very active in terms of at least doing the work, right? Doing an IPO is not, you can't wake up one morning and say, I want to do an IPO, right? It takes time. It takes a year to sort of build your systems, processes, and then the final part of the DRHP, etc., again takes another 6 to 12 months. So people are doing that. There's a lot of activity going on. Obviously, it's dependent on what happens globally as well as in the Indian capital markets. I think we're seeing a little bit of a blip right now, but hopefully that's temporary. I think, companies are still working, at least we know many of our companies are working on the IPOs to get ready so that when that window does arise again, we can act very, very quickly and be prepared for that. So definitely there's going to be some action. There's no prediction about when things could change or the window could go away, but you've got to be prepared. And the macro environment is still encouraging in terms of pushing companies to work towards this.
That's how the P also cashes out. So
it is one of the avenues for private equity to cash out. I mean, the good thing is, we, as most funds would have 3 or 4 avenues. So there's, IPO is one. It's definitely very attractive. There's a private equity to private equity, the secondary market, which is probably the dominant mode of exits for funds. And then there's the strategic exits as well, which is again something that is available. So you want to sort of straddle between the 3 options based on the situation, based on the company, based on the story, based on the industry, a whole number of factors sort of that drive that.
Is the worst over for the markets?
I think again, we don't think of markets in the short term, in the short term, right? We think of it only from a long-term perspective. Our investments are 5 years. So we really don't look at or are bothered by what's happening in the last 1 month or 3 months. I think markets clearly have tracked down. But if you look at it even over the last 12 months, it's still, fairly positive. And India as a country has done much better relative to other geographies. Is something fundamentally broken in India? I would say not. And that's something that we care about. So really, it doesn't matter whether the markets are up or down. I think our business is to make investments and to sell. You want to invest when markets or valuations are a little bit more attractive. You want to try and sell when valuations are attractive in terms of up. And so you want to play both cycles. And so you got to be nimble enough to be able to do deals when prices are cheaper. You got to be able to exit when valuations are more attractive.
So there was a finance ministry report which says that household savings are shifting towards market-linked products, and they feel that this could lead to losses for the investors. So how do you see? What's your view on this?
So I think one is, I think historically India has been very dependent, especially on the capital market side, on foreign institutional investors, right? And I think you're seeing a little bit of that change. With domestic institutions, and a lot of that is coming from household savings. So household savings, now the SIP is very, very popular, and so you're seeing a lot of capital come in. And it is good as a country to not be overly dependent on external sources of funding, because, markets are and react to what's happening globally, but you want to also have a domestic sort of anchor to be able to straddle that, or to be able to counterbalance that. And the benefits of the household savings is that as long as they come in through more institutional type of products, you are able to have a little bit of a counterbalance. And we're seeing that, today. So that's definitely an encouraging sign relative to where we were 5 years or 10 years ago.
Does US Fed's decision to hold the rates worry the markets?
No, so I think it does affect, right? Look, ultimately a lot of our capital comes from US or North American investors, or investors who look to invest in the US. And, most of us, when we raise capital, our 60% of our capital comes from North America, right? But the alternate of investing in a private equity fund like ourselves is, can I invest in the US? Can I invest where the returns have been fairly attractive? And if you look at it from a risk metric perspective, the risk is significantly lower there. So risk-adjusted returns in the US are a lot more competitive. And so that is a decision that affects people like us to say, are investors going to put their money in places like India versus in the US, where you may be able to deliver decent returns, but risk-adjusted returns, how do you stack up against the US? And that's been a big challenge for private equity markets in India.
I know one question everyone wants to know is the funding winter over?
So, it is. So the funding winter has affected a little bit more the venture world as opposed to the growth part of the private equity universe, and the reason for that also has been, the venture part of the world has seen a lot more, outlandish, if I may call it that, bumps in valuation, right? And not necessarily completely backed. So whereas on the growth side, where firms like ourselves sort of play, it has been a lot more stable, right? And so it is expensive. I won't say valuations in India are cheap, but it's been relatively stable. And so at least on the growth side, we're not seeing as much of a funding winter. And the competition, as I said, is, can India provide an alternate or a decent return to investors relative to, investing in places like the US? And so that is the challenge. We're definitely seeing some firms being able to raise capital. We're seeing portfolio companies being able to raise capital. The good ones have been able to raise capital, and so that's definitely encouraging.
My last question is about the top 3 trends you see in the private equity space.
So again, different firms do different things. What we do is we try and work with industries which we know and we've tracked for a long time. So things like financial services, definitely, there had been some headwinds in the past. I think you're seeing some of that change. So that's definitely encouraging. Pharma, healthcare has always been something that we've liked and understood well. Enterprise tech, again, that, there are some challenges there where you're exporting, where US is the natural ally there from an exporting partner, and what's happening in that part of the world does affect some of those businesses, but we still feel that it's attractive enough in that sector. So those are the 2-3 sectors that we like and understand and track for a long time and will continue to be the mainstay for investment opportunities. I mean, there are obviously other firms that look at infrastructure, understand some of those asset classes a little better. There's some, and other asset classes. But these are the ones that we know and like and pursue.
Thank you so much, Ashley, for speaking to us.
If you like the video, do like, comment, share and subscribe.